Should you buy property now or wait? Right now in 2026, this is probably a concerning question buyers are asking. Prices are still going up, yet each new launch is almost sold out. And on top of it, the war and rising oil prices, economic uncertainties, it's natural for buyers to become a lot more cautious. If you buy now, are you overpaying? But if you wait, will you miss out? So in this video, I'm going to break down the impact of oil prices on real estate. Is this really the right time to enter the market? And how will prices move in 2026 and beyond? Before we move on, hello, my name is Tan. I help property owners navigate the market and avoid costly mistakes before they commit. So do like and subscribe to my YouTube channel to get regular insights and strategies to help you make better decisions. Call me or DM me if you would like to discuss your situation and we can work through it together. First, what are the impact of increasing oil prices on real estate? With what's happening globally, there's actually a lot of negative news right now. We have the ongoing conflicts in the Middle East, and as a result, oil prices are spiking and stock markets are becoming more volatile. So with all this news, we need to understand the underlying impact on the real estate market. So for us laymen, what's the most immediate impact to us when oil prices spike? We think of petrol prices and how fast the petrol stations reacted by increasing prices rapidly throughout those weeks, but were so slow in bringing down when oil prices dropped. So when oil prices go up, most people think it only affects things like petrol or transport, but in reality, it has a bigger impact, especially on construction. It actually affects almost every part of construction because oil is not just fuel for cars, from transportation of materials to production of key raw materials like steel and cement, and to operation costs of running the heavy machinery. So all costs relating to construction will escalate. These cost increases don't impact the property market immediately because most projects today have already locked in their land price as they were land bids awarded last year and already secured their construction contracts and ready to launch this year. And developers would have built in some buffer to cover these cost pressures for a short period. So in a way, current launches are somewhat buffered from these rising costs. But as oil prices and construction costs continue to increase, future projects that are not launched yet, the ones that are in bidding right now or just bidded and launching next year, are the one that has to factor in these high costs. And when that happens, developers don't absorb the increase. They have to pass it on and price it into their projects. So now you see the impact of increasing oil prices on property. Prices will definitely increase for future launches. So based on the above, I come back to the question again. Should you buy now or wait? So other than construction, when oil prices go up, the impact actually flows through the entire economy. So transport become more expensive, goods become more expensive, businesses face higher operating costs, and these costs don't just stay with businesses, they get passed down to consumers. So grocery, utilities, daily expenses, everything become more expensive. And this is what drives inflation. And when inflation rises, in order to keep these costs from increasing further, spending must be curbed. And to discourage spending, the cost of borrowing needs to increase. And this means interest rates need to go up. This year, we were supposed to see falling interest rates. Instead, there's now a possibility of interest rate increase. In fact, if you look at this graph, fixed interest rate have already increased. It used to be around 1.35, but it has risen to about 1.6 in April, while SORA is still holding up. So do you want to lock in at still relatively low interest rates today, or wait till we go back to the days of 4 to 5%? So after the US-Iran war started in late Feb, recent launches include River Modern, Pinery, Vela Bay, Tengah Garden residences, and they have all been sold out to a high percentage. River Modern 90%, Pinery 92.5%, Vela Bay 72%, and Tengah Garden 99%. Why are people still buying? These buyers understand the logic of buying at present day prices because future launches will only get more expensive and it's backed by data. We have seen quite a number of crises throughout the entire real estate cycle, and each time when a crisis struck, buyers always pull back, and it's very natural to be prudent and worried about the impending uncertainties. However, every crisis presents an opportunity, and more recently, we've seen with COVID and the Russian-Ukraine war. Did property price decrease? Maybe for the immediate 1 to 2 quarters when the crisis happened, but overall, year on year, we see an increase in private non-landed home sales. So, buyers who took action during those crises have seen their properties appreciate in price. So, these are the recent GLS land bids, and we see increasing land costs. Actually, these are signs that current launches are safe to enter because future launches will get more expensive. Land costs are higher, construction costs will be higher, and these are the two main bulk of the cost for developers. So does it mean that people who bought apartments with a higher land cost are at a higher risk? Here are the OCR land prices over the years from 2016 to July 2025. There are some projects where developers bought at high land prices at that point in time. For example, Whistler Grand, Lentor Modern, and Amo Residence. And consequently, buyers bought their units at higher launch prices. Look at the profits for Whistler Grand when they exit this year, 600K to 720K over a period of 7 to 8 years. Lentor Modern, 200 to 500K in less than 4 years. Amo Residences, one of the first projects to reach 2K PSF, 300K to 582K in 3 years. And same in the RCR, Sterling Residences and One North Eden had relatively high land costs at that time. And profits for Sterling have reached close to $1 million within 8 years, and One North Eden more than 600K within 5 years. So what can we see from this data? Many have bought at high land prices and yet exit with healthy gains. But there are also projects where buyers entered high and didn't see much upside, or in fact, made losses. What really matters is if you're entering at a safer price point with the right guidance in project selection, your chances of exiting safely are much higher. It doesn't guarantee profits. Profits are a nice bonus, but it significantly reduces the risk of being stuck. And if we can look at real estate from another perspective, instead of focusing purely on profits, we start to see it as a tool for building long-term wealth and not just short-term gains. So take for example Pinery Residences in Tampines. It sold at 2546 PSF at launch and even reaching a high of 2730 PSF. 7 years ago in 2019, a 5-bedroom in Treasure at Tampines sold at 1.9 million. Today, a 5-bedroom cost 3.5 million in Pinery Residences, an increase of 84%. What contributes to this big increase is the increasing land cost. We see in every region, land costs for newer plots of land get higher and higher. And we see the current OCR price reaching previous RCR land costs. Likewise, current RCR land costs reaching previous CCR land cost. Because of land costs, prices for future launches will only get even higher. So, assuming one bought a 5-bedroom at the age of 40 in 2019 at Treasure at Tampines, by age 47, a similar 5-bedroom size in the same estate today cost 3.5 million. So, by retirement age at 65, what do you think the price will be? If we just take a very conservative increase of say 30% over the period of 18 years, so that's like 1.6% per year, we get 4.55 million. So at retirement age, with a 4.55 million property probably fully paid up, or maybe with a small amount of loan left, if one were to sell and right size to a smaller property, wouldn't it be a very comfortable retirement with quite a lot of spare cash to spend? So should you wait to buy when prices will eventually increase, or buy to wait for your property to grow in value? You can leave the thoughts in the comment section. So in this last part, I would like to share with you some forecast figures so you can see how prices can potentially move going forward. So how do we read this? The orange line refers to average land rate in PSF PPR, and this is the average of the whole of Singapore, meaning all regions, CCR, RCR, and OCR. And the blue line is the average new launch, new sale price in PSF. So we see that in recent year, the gap between land rate and launch price is 1,300 plus. And we take from 2023 onwards, because that was when GFA harmonization was implemented. So we can have apple-to-apple comparison. Assuming land cost rise by 4% per year. So this is 4%, and we round up the gap to 1,004. So this is 1,004, 1,004, 1,004. We see that by 2030, the average new launch price will reach 2,900 PSF. And using a 1,000 square feet unit and multiplying by the forecasted land price, the overall quantum in 2030 will cross 2.9 million. So with these figures, which are logical and realistic, would you wait or enter now? DM me your thoughts, or feel free to reach out to me if you need any help, clarification, or discussion. Don't forget to like, subscribe, and share if you find this video useful. This is Belton signing off. Catch you in the next episode.